Great.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Devina Khanna and this is Indian Open. Let's go straight to the headlines now. IL&FS Group gets a lifeline from its shareholders, some of whom will pump in money through a rights issue. The intra-lender also secures a note to increase borrowings. The Ministry of Corporate Affairs has ordered a probe into Vakrangee's operations over the last 3 years. Bandhan Bank says it's ready to take the inorganic route to meet RBI's guidelines of bringing promoter shareholding below 40% after the regulator bars it from increasing branches. And the government will borrow less than planned sum in the second half of the current financial year. The move is aimed at maintaining stability in the bond markets and ensuring enough liquidity in the system. All right, and picking up from the last headline, let's take a look at what's the trade setup looking like as we step into trade this morning. So while we are talking about what the government has been doing in terms of the soothing the nerves and the sentiment in the bond market, they are looking to cut their borrowing for the second time in this fiscal, and the government will be selling bonds worth about 34.1 billion in the next 6 months starting the 1st of October. That together with the 2.88 trillion rupees of debt sales this fiscal. So that probably should help and calm some nerves with regards to the yields as well, which have been up at a 4-year high. They also intend to stay within the fiscal target of about 3.3%. IL&FS, that's the other one that you need to watch out for. They have come up with a three-pronged strategy to bring it back to solvency. What is the three-pronged strategy? They are looking at focusing on the asset sales. They are looking at a rights issue of about 4,500 crores and on an immediate basis to get liquidity to pay their debtors till the asset sales begin once again. Aside from that, they've also received a shareholder nod to raise about 15,000 crores via an NCD issue and also to increase the firm's borrowing limit by 40% to about 35,000 crore rupees and increase its share capital to enable the rights offering. Markets focus on that for a moment now because we've got the 4th consecutive week of losses coming in for the indices. Worst September for the market since Lehman. So you've got the indices which have been down about 6.42% in the month of September. Well, during the Lehman crisis, it was down 10%. But if you see the rest of the parameters, like what the Nifty Junior, Nifty Mid Cap Index and Nifty Small Cap Index have done, we're pretty much at par with what we were in the month of September, the time we had the Lehman crisis. Aside from that, in terms of what activity we are seeing on the FII side, so there has been a lot of selling pressure once again. FIIs have sold over 10,000 crores in the month of September. They sold nearly 9,600 crores in the last 7 sessions alone. So you can imagine the kind of a negative sentiment build-up that the market is seeing already. In terms of key events to watch out for the RBI policy that comes in towards the end of the week. The RBI may look at going slow in terms of adding 2 more interest rate hikes since the month of June. Financial conditions have turned a little bit tight and the liquidity crunch may actually lead the RBI to taking a slower rate hike stance going forward, but we'll have to wait and watch as to what the RBI stance on the same is going to be. Taking a quick look at what the world markets are doing and before we head into specific stocks as well. So in terms of the US market setup, it was slightly positive. So you've got a flattish move on the Dow. Nasdaq also closed absolutely flat. The S&P trading at 2,913. In terms of the Asian market setup, you've got Hong Kong and China, which is shut for trade. So it's just the Nikkei which you're going to be watching for. That is up closer to about 0.75%. 24,298. SGX Nifty, a quick look at our setup. We've got a flat move there, absolutely catatonic, 10,968 on the SGX. Individual stocks to watch out for. Engineers India, they've received an order worth about 5,000 crores for the execution of the HPCL Rajasthan refinery. Mechanical completion of the project will be done in October 2020. Bandhan Bank, they they've been not given permission to open any more new branches. That stands withdrawn, as well as a freeze on the remuneration of the MD and CEO, because they've not been able to bring down the holding company shareholding to about 40% as per the regulatory norms. Other stocks that you need to watch out for: Vakrangee gets the Ministry of Corporate Affairs order for inspection of its books of accounts for the last 3 financial years. J. Kumar Infra is the other one. SEBI reinitiates the investigation on the Shell company issue, passes the order for a forensic audit of the company's accounts. Adani Transmission, that's the last one we need to watch out for. They've got their plea challenging the bidding process for the supply of PNG and CNG in 3 areas in Ahmedabad. That has been dismissed. So all of these stocks probably could see some bit of action in trade today. But before we go ahead, let's quickly take you through the first word headlines. Starting off with the first one: it's been a busy weekend for IL&FS top brass and its shareholders. Vishwanathan Nair steps in to take us through decisions taken so far. And Shraddha comes in to talk about RBI's latest move on Bandhan Bank and how the lender plans to set it right. Vakrangee is under further scrutiny now that the MCA has decided to probe its financials for the last 3 years. Darshan tells us what has got the MCA to take in. And not all automakers may have a smile on their faces today. Yatin will tell us why. Straight to the first story. And debt-trapped IL&FS has managed to convince its shareholders to pump in much-needed capital to honour some of its repayment dues. The infrastructure lender, which held its annual general meeting and board meeting on Saturday, will also look to borrow more and sell at least some of its assets. Vishwanathan Nair joins us on the show for more details. Vishy, what have you got? I mean, there's a lot that's been going on in terms of, the 3-pronged strategy that they want to use to get back to solvency, and what they're actually anticipating from shareholders and how they can contribute to the same.
Yeah, so during the Saturday meeting, they presented in front of the board the issues why they have been seeing multiple defaults over the last 1 month or so, and the potential resolution plans that the company aims to sort of implement to try and turn it around. So according to a statement that was presented by Hari Shankaran, the vice chairman as well as managing director of the company, he said that we're going to adopt a 3-pronged strategy. The first being we need to complete our rights issue as soon as possible. They're aiming an October end sort of deadline for it. That's about 4,500 crore, which could come in from existing shareholders, large guys like LIC and Oryx. They together own about 45% of the company. So that's the first step. The second being sell off some of the assets that they've developed over the years, try and get some liquidity in, and then pay off the creditors whoever have their exposures to these projects. And the third and the final point, and this is something that's more near term, is to get some kind of liquidity, some kind of credit from the market to essentially try and resolve some of these stress. Now remember that they have 2 available mechanisms to raise money, one being the non-convertible debenture route, the NCD route, or you could go for direct loan from some of its existing shareholders like LIC and SBI. The NCD issue might be a little far-fetched because at this point in time the paper holds a junk rating, so going to the market and raising funds might be a little difficult. It may come at a very high cost. The second route, which is to get credit, may get approval from LIC immediately, because the LIC chairman has already made it clear that they're going to support the company at whatever cost necessary. But SBI and this is what we understand from our sources within the bank, SBI might be a little reluctant to either participate in the rights issue or even the loan, because they feel that unless you submit a resolution scheme, we're convinced, our board committees are convinced about the funds, we are not going to extend any kind of support till that point in time. To ensure that this resolution plan comes to fruition, they have appointed this agency, Alvarez and Marsal, which is a restructuring company. They said that once Alvarez and Marsal comes in and develops this sort of resolution scheme, which could include the asset monetization as well, once that is submitted in front of the SBI board, after that they can think about extending any kind of support. But all in all, at this point in time, a lot of moving parts. We will get to know about Alvarez's plan to come up with a resolution scheme in the next few days, but until that happens, it's unlikely that SBI is going to participate on an immediate basis. LIC, Oryx, the rights issue may happen quicker than probably the loan.
Any idea how soon?
Well, the loan could take as many days as it takes for the resolution plan to come in. But as I said earlier, that the rights issue is aimed at by end of October. So that's about a month or so left. Remember that they have been continuously defaulting on payments. IL&FS Financial Services, which is the NBFC arm, ITNL, which is the transportation network, which essentially builds roads, as well as the parent company IL&FS Group. All of them have been continuously defaulting on all of their credit obligations. So it may happen that over the next month or so, we could see more defaults. We're not sure yet how much of the repayment is going to come up in the next 30 days. But if they're able to complete that rights issue by the end of October, then a lot of their liquidity.
What is the immediate liquidity that they need? I believe it's something around 3,000 crores.
Yeah, so the 3,500 crore is the loan amount that we're discussing. So because loans typically tend to take shorter time to sort of get it together, that amount is an immediate amount that is needed. But that plus the rights issue could be about 8,000 crore totally. So
And also the other part being the assets to be monetized need a legal framework, which takes some amount of time to.
Yeah, so they've approached the NCLT for some kind of a special structure to be created so that these assets can be bundled in together and then sold through an SPV specifically. But there's also an insolvency petition that was filed by SEBI. So they're seeking some kind of protection from the NCLT against this sell-off. So unless the NCLT approval comes in, you can't really say how soon that asset monetization could take place. So those things take time.
So on an immediate basis, it's just the loan.
The rights issue and the loan, yes.
So that adds up to a total of about 7,500 to 8,000.
8,000 crore roughly, yes.
All right. Rishi, thanks a lot for that.
Much.
All right, so that was the latest that we have on IL&FS. But let's move further into the financial space. And the Reserve Bank has put Bandhan Bank's branch addition plan on hold. This after the lender failed to meet licensing norms on bringing promoter holding down to 40% within the first 3 years of operations. Shraddha Babla, she's here with us. She's got more details on what the bank's response to this observation has been. Shraddha, obviously, they've been listed just a year back. So for them, it's also important to fall within the framework of SEBI.
Right.
So, what has the bank responded to this?
Right. So, they listed in March, but just quickly run through what has happened. Two things. One, the RBI has placed restrictions on any sort of new branch opening under the automatic approval route. With RBI's permission, they can do that, but not under the automatic approval route. And the second thing that they've done is frozen the remuneration of MD and CEO Chandrasekhar Ghosh at the current levels until further notice. Why have they done so? That's because the bank has failed to meet the licensing guidelines with respect to bringing down the promoter holding. The promoter, which is the non-operative financial holding company by the name of Bandhan Financial, that was supposed to bring down the stake to about 40% within first 3 years of banking operations. Now, the bank started operations in 2014, so even after 4 years, the shareholding of the promoter stands at 82.3% as compared to the 40 that was required under RBI's directive. The bank has a further requirement to bring down the holding company's stake to 20% within 10 years of starting the business and 15% within 12 years. Now, Bandhan Bank's argument has been the SEBI mandated lock-in on the secondary sale of promoter shares for 1 year after the IPO. That's one of the reasons that was cited by the management on the con call. So the question now is, will this RBI strictures prompt a change in the bank's expansion plan and growth? Well, now the bank has 937 or 38 branches as of June, and they're targeted for a number of 1,000 by the year end. So since they're very close to this target that they had set for the year, they're not expecting any disruption to the normal business. And the management on the con call did reaffirm that the current branch count could actually support growth for the next 2 to 3 years. Just want to quickly point out the current shareholding pattern of the of Bandhan Bank. The promoter group, which is Bandhan Financial Holdings, holds about 82.3%, and the remaining 17.7% are to the public. With Devini, now the questions are, of course, if the management bandwidth will now shift from growth to dealing with these compliance issues.
Right. So how is Bandhan Bank, what are the measures that Bandhan Bank can now take in order? Because I remember the same issues being plagued for Kotak as well, just some time back. So for Bandhan, it raises the same kind of issues, and probably other solutions the same too?
Right. So it looks like there are 3 possible options at this point in time. One, given that Bandhan Bank has a very high capital adequacy ratio of 32.6%, they could go ahead and make some acquisitions. So the high capital base allows for them to do so, and that will then dilute the promoter shareholding. The second option is with respect to making some sort of changes in the holding company structure or redefining the promoter entities. But this was something that the bank management declined to comment on in the call, saying that it was the RBI's prerogative to allow them to do so. This promoter shareholding or the holding company structure shareholding issue is one of the possible options, because it is who holds stake further in that holding company is about 40% of it is held by two trusts and another 40% by large institutional investors, and hence they could make some changes there. The third option is that the financial holding company can itself go ahead and pursue some non-banking businesses in the financial services domain. On that, of course, questions will remain as to how well this would be received, given that they wouldn't have any prior experience in those businesses. So for now, JP Morgan has said that they believe the regulation will not be a drag on at least the operating growth in the near term. But yes, the stake sell down will have or will act as an overhang on the stock, at least in the near term. They have retained the rating, neutral rating, and target price of 670 on the stock for now. But clearly, the shift in management bandwidth, questions about growth and what steps they would take, and if at all there was any acquisition to come in, what sort of dilution that would lead to for return ratios, is what will weigh not only on Bandhan Bank but even Kotak, like you said, because this is RBI sending a stronger message per se to Kotak as well. That's how it's been perceived.
Yeah, but interestingly, the option that you mentioned about tweaking the shareholding, it looks like a very complex structure at this point.
It is a complex structure because, but the whole point or the rationale here, which the argument here is that the holding structure is not. Is actually pretty well diversified. It may look like 82% holding is by this financial holding company, but you need to look and understand the breakup of who is a shareholder in that holding company, and possibly some tweaks that are likely to be made there.
All right, Shraddha, thanks very much for that. So interesting observations. We'll be watching out for Bandhan Bank and probably even Kotak Bank when trade opens up today. Moving on, the Ministry of Corporate Affairs wants to investigate Vakrangee's books of accounts. The ministry has sought financial statements for the last 3 years, according to an exchange filing made by the company. Darshan Mehta, he's here to take us through all of that and more. Darshan, Vakrangee obviously is going to be the center of focus, and why exactly have they started to open up and start this investigative probe for the last 3 years?
So Devina, over the past few quarters, there has been trouble that's brewing in Vakrangee, be it with claims to their Kendras, be it in terms of why the auditors resigned, what's happening as far as insider trading is concerned. We'll speak about that. So the big news that came in is that Vakrangee has said that the MCA has investigated their book, and basically the scope of investigation. The first point that they want to know is why did Pricewaterhouse resign suddenly as the auditor of the company. So that's the first scope. The second scope is the income tax assessment order, the tax audit that the company has done for the past 5 years. That is something that the MCA wants to know. Apart from it, the other factor is the Vakrangee Kendras, because they had indicated and they had hired Grant Thornton earlier so that assessment could be done, and a lot of people had claimed that they don't have the necessary amount of Kendras which they are claiming. They also want to know what is the deposit that they have collected as far as some of the franchisees are concerned, as far as some of these Vakrangee Kendras are concerned, and mainly the shareholding pattern, and this is to do with the open offer that Vakrangee has to give because of change in shareholding norms. So a lot of queries that Vakrangee has to answer for them. Now, if you're looking at it, financial position of Vakrangee for the last 3 years has deteriorated from being a 3,000 crore top line. They moved to almost 6,500 crores, and since trouble started in the first quarter, they've just done 1,000 crore. Look at the EBITDA trend. From an EBITDA margin of almost 25%, they've moved to an EBITDA margin of just 1%. So no doubt the financial position of the company has deteriorated. Even if you're looking at the profit from an EPS of almost 7.5 rupees in the first quarter, they have done just 0.12. So the financial position is deteriorating, and that is also something that the MCA will look at. Now, what is the timeline timeline from where the trouble started. Vakrangee was a 55,000 crore market cap, and then what happened was Mumbai Mirror in Jan reported that the exchanges are looking at price manipulation, and from that day the stock has been falling. The second big trigger came in Jan 2020 in 2018 when Vakrangee bought 20 lakh shares of PC Jewellers, and from that day both PC Jewellers and Vakrangee shares have fallen tremendously. What happened then is that Vakrangee clarifies on the SEBI manipulation news, and they said that nothing exactly is happening, but trouble was already there and the share had actually started falling. Now what they did to actually restore confidence was in Feb they approved a capital allocation policy with a 250 crore dividend payout and a 1,000 crore buyback. Even there were questions raised as far as their Vakrangee Kendras are concerned. So in March, they appointed Grant Thornton to carry on the audit of all the Vakrangee Kendras. What the trouble actually started in April 2018 when PwC arbitrarily resigned as the statutory auditor of Vakrangee. Then all hell broke loose on Vakrangee and the share started falling significantly. What they did immediately was they appointed PS as the statutory auditor in a matter of few days to carry it because PwC had resigned. Surprisingly, in June 2018, they went back on their word. They made changes in the capital allocation policy. So instead of a dividend payout and a buyback, they changed it, and they said that they will incur a huge capex to upgrade all the Kendras with the ATM, and so that's what they're saying. And post completion of certain Kendras, they will be able to take a decision on the capital allocation policy. In August, SEBI orders Vakrangee promoters to make an open offer, and the MCA audit in terms of shareholding pattern has to do with this. And finally, what are the latest news is that the MCA has ordered inspection of the books. So on multiple counts, Vakrangee has now to answer the MCA for a lot of issues that it's been spoken about.
All right, Darshan, thanks a lot for that. So the probe will include the resignation of the statutory auditors, income tax orders, tax reports in the last 5 years, and like Darshan highlighted, a number of the Vakrangee Kendras located in India. Well, the stock didn't do much. It was down about 3.5% on Friday's session. Let's move on now. The auto pack is in focus. So we've been seeing some pressures building around the auto stocks of late. But what's more interesting to see is the kind of auto sales numbers. Not all automakers will be happy with the monthly sales numbers coming out today. A Bloomberg Quint poll of 3 analysts tracking the sector show flat sales for some of the car makers in the month of September. Yatin is joining us right now to take us through the numbers. So Yatin, what's the concern really? Is it just the delayed festive season, or there is more to the story?
So, sentimentally, the higher interest rates, which have been moving higher, and so is the case with the fuel prices. The higher, the fuel prices and interest rates go, probably that pinches the pockets of consumers, and that is probably one of the reasons why at this time the auto sales would be lagging. Of course, apart from these two sentimental factors, we also have the festive season delay, which will be weighing on the auto sales growth numbers this time, because last year same time we had the Navratra starting. This time, that has come with a lag, and probably that will impact the sales. So if you look at Maruti Suzuki, we are expecting almost a flattish kind of a growth number, 2% higher for that one on a year-on-year basis. Mahindra & Mahindra automotive segment, we are expecting a 3% kind of a growth. However, this is also on the back of the new Marazzo launch, so that will not be aiding the sales this time according to the analyst poll that we have conducted. However, because of a higher base this time, we will have the tractor sales for Mahindra & Mahindra declining by nearly 16% on a year-on-year basis. We are expecting the tractor sales to be close to 38,500 versus 45,500 odd on a year-on-year basis. If you look at the commercial vehicle plays, Tata Motors, of course, the medium and heavy commercial vehicle segment will do well. Not only that, the passenger vehicle segment for Tata Motors is also expected to do a 28% kind of a growth. So on an overall basis, a 22% growth expected for Tata Motors. For Ashok Leyland, again, we are expecting a strong number, almost 19,500 units, and that will translate into a year-on-year growth of 27%. On the two-wheeler play, we'll be interestingly watching out for Bajaj Auto. This time, the domestic sales for motorcycles will be under pressure because of the points that I discussed earlier. But the export markets and three-wheeler sales will be boosting the overall growth, which is expected to be at close to 8%. Hero Moto, Royal Enfield, and TVS Motors, 6 to 5% kind of a growth range is what we are looking at for all of them. So this time, probably because of weak monsoon, delayed festive season, and rising insurance premium, especially for the two-wheeler space, could impact the sales. So let's see how really do the auto companies report the numbers today. Most of them will be reporting. So let's see how really does it shape up for the month of September.
All right, Yatin, thanks very much for that. So that's the auto sales number, the expectations of that. So not a very exciting month of September this time around. Higher fuel oil prices, interest rate costs going up, as well as a delayed festive season could deter demand in the month of September. But that brings us to the end of First Word, but a lot more is lined up on IndianOpen. The latest gas price hike will take effect today. How will it benefit ONGC's gas business? We'll hear it from the chairman, Mr. SASHI, and get an analyst view on the impact of gas price revision that it will have on financials, not only for oil and gas companies, but also allied industries and consumers at large, with a Probal Sen of IDFC Securities. Import restrictions on petcoke, ban on sand mining, and the onset of monsoon, the cement industry has faced it all this quarter. So how does the demand scenario look like following these disruptions? We asked Jamshed Naval Cooper of Heidelberg Cement. But after this break, we take a full tilt towards the day's trade. Stay tuned.
अमीर थी ये धरती फिर भी गरीब थे हम लोग उगाते थे चावल फिर भी भूखे थे हम लोग ना रास्ते थे ना मंजिल की थी आस खड़े थे दुश्मन बंदूकों के साथ था बीमारू बस अपना ही नाम यही थी अपनी पहचान हाँ यही थी अपनी पहचान
लेकिन भैया ये तो 15 साल पहले की बात है पर आज
नाम है हुनर से काम है ऊंची उड़ान है नई पहचान है विकास का इतिहास है हमें रमन पर विश्वास है छत्तीसगढ़ खुशहाल है स्वर्णिम भविष्य की आस है
Good news, got a promotion and a damn good raise.
Congrats बेटा।
वाह, रेज? अब तो इंश्योरेंस पॉलिसी ले ले।
कौन सी कंपनी से लूं?
चूज वही जिस पर हो पूरा भरोसा।
That's good, but आज की जनरेशन wants everything online. Easy premium payment options, loan facilities और wide range of products.
पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना, same choice. LIC.
LIC, trending with times. 62 सालों से हर जनरेशन की पसंद।
Hi, I'm Jatin Khimani. I'll be at Investors Carnival this year talking about the art of selling stocks. Watch me on Bloomberg Quint.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure. It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're watching Indian Open right here on Bloomberg. Quint, a quick glance at what's been happening in Asia. Well, just Japan, because you've got Hong Kong and Chinese markets which are shut for trade today. So Nikkei 225 is up about 0.5%. It's cooled off a bit in the last half an hour. 24,263 is where it's trading at. Taking a look at SGX Nifty now. The setup is absolutely flat, just about 0.1% in the green for the index. 10,970 is where SGX is trading at. Remember, lots of cues to track amongst individual stocks from the index itself and the options activity. Remember, there has been a lack of open interest build up on the futures, and even on the options, the concentration is between 11,000 and 11,200. Directional bias is missing in the market. But let's get to know more of that from Agam, who's joining in right now. Agam, good morning.
Good morning, Devina. Well, we have seen the new series come through, and of course, with the 1st of October, let's take a look at how things are panning out for the futures and options space. We have seen a cut of around 0.5% for the benchmark indices, with the open interest not showing too much change, despite the fact this is early days in the October series. And the Nifty banking futures did see some longs building in, considering the underlying advance by around 0.3%. India Volatility Index, again, that's where we saw a little bit of an increase. This is despite the fact that we saw largely range-bound moves for the benchmarks, still at around 17. And when it comes to change in open interest, as you can see, we're starting to see a lot more activity around the 11,300 call. And of course, on the lower end, we've seen more and more writing around 11,000, 11,800 puts. But let's take a look at the put call ratio. That again is largely around the same levels of around 1.33. And moving in terms of stocks, we're keeping an eye on Infibeam, which fell 73%. We'll be looking forward to talking to the management today later on in the show, but we have seen a lot of traction there. Hero MotoCorp down 5%, shorts added there. We also have a lot of traction in Indiabulls Housing Finance. Again, a lot of shorts, considering a near 9% decline in its underlying. And finally, let's pull up something like in Apollo Tyres. That's also declined, but we're starting to see unwinding coming through, considering a decline in OI. So a lot of stocks out there still remain weak. Can we expect some recovery today? That's something we're going to have to wait and watch.
All right, Agam, thanks very much for that. Just quickly looking at some flashes on your screens, and RBI is looking to inject liquidity of about 3,000 crores via open market operations in the month of October. Remember, they've already been doing that, so this is something that was on the calendar for them. About 36,000 crores, that's a big amount that they're talking about, based on the assessment of durable liquidity needs going forward and seasonal growth in the currency circulation observed in the build-up to the festive season. They've kept all of that in mind, and they're looking at an amount of 36,000 crores in order to inject liquidity into the system again. Just picking up on a few stocks that Agam also mentioned before we go across. Actually, Ira is joining us right now regarding this news. Ira, what have you been learning from the same?
Morning, Devina. I think this is a continuation of last week's intention and actions to ensure that system liquidity remains comfortable. So what the RBI has done today is provide a calendar under its open market operations, saying that in the month of October, we are going to infuse 36,000 crore. We are going to do it in 3 tranches. And of course, this is going to be done under the open market operation program through bond buybacks, government bond buybacks. It's notable for 2 reasons. One, typically the RBI does not provide a calendar. In fact, market participants keep crying out for a calendar, because then it allows them to plan better and have more predictability on how much liquidity will be infused. The RBI typically stays away from that, but this time, noticing perhaps the nervousness in the market or the sentiment issues in the market, they have given you an upfront guidance that there will be 36,000 crore in open market operations this month. The second is the pace. Until about August, they were doing 1 a month. In September, they did 2 a month,
I think we've lost the line on Ira. But like she just mentioned, that this is interesting because it gives you the calendar for the OMO operations, and probably, like she highlighted, the nervousness in the market is what's demanded this from them. Ira, can you hear me?
Yeah, I can.
Yeah, go ahead.
Can you hear me? Yeah. Okay. Yeah, so I was just making a brief mention that this should help bring down the short-term rates when they start to open. So the T-bill rates had gone up to about 7.18 at a peak last week, so should help bring those down.
Ira, the quantum of 36,000 crores, how does that stack up to their earlier OMOs?
They do usually 10,000 crore in each tranche. This time it's working out to about 12,000 crore in each tranche. So, the total amount is significant from the monthly perspective as opposed to per auction perspective. Because as I said, I think you may have missed that. In August, they did 10,000. That's been their average on a monthly basis. In September, when things started to go awry, they've done 20,000, 2 rounds of open market operations. And in October, they're doing 3 rounds of open market operations. The overall liquidity deficit has been running in the range of 1.5 lakh crore or so. So it's not like it takes away the entire liquidity deficit. But then, of course, they have been doing term repos, etc., that have continued. Plus, they had reduced or increased the carve-out from SLR, which was a huge relief as well. So I think broadly, they're making sure that they're on top of the liquidity situation from a system level. Beyond that, of course, NBFCs are a separate issue.
All right, Ira, thanks very much for stepping in and clarifying that for us. RBI doing its bit to ensure the systemic liquidity is probably under control. Not the whole quantum of it, but a bit by bit through various routes. Taking a look now into the markets and diving straight there. What's been happening in the derivative space, we've spoken about that. For the indices, the 4th consecutive week of losses that happened ending Friday, that doesn't send a very good note across. But we've got Samir Kalra, he's the founder of Target Investing, joining us right now on this show to run us through how to set up for trade this morning. He'll be joining us in a few moments from now, but just to talk about a few stocks. Infibeam was one stock that we highlighted in terms of the futures and options space. 71% cut on the stock that happened. There was some clarification that came in from the management as well. We will be hearing from the management. They said that they had given interest-free unsecured loans to their wholly owned subsidiary NSI Infam Global Private Limited. So, most of that will be clarified by the management, and the reaction to the stock was something that really sent some shivers in the market. But let's see whether or not that stock sees a rebound in today's session or no. The other one is going to be Yes Bank. Mr. Rana Kapoor coming out in full support on Friday evening, sending out a tweet that he's not going to be selling any of his shares in Yes Bank. Samir Kalra, founder at Target Investing, is joining us on the show right now. Samir, 2 stocks, Yes Bank, and if you track Infibeam, how do you think they're going to be shaping up for trade this morning?
So Infibeam we don't track because there were a lot of related party transactions which we were not comfortable with. So we avoided tracking that stock. So I really don't know how this impacts. Yes Bank, we have somewhere started buying in small bits because I think the reaction to the whole board division and Madhu Kapoor coming out into a differentiated opinion, I think this all has been exaggerated on the downside, and the market's trends are leaning towards the downside. So any kind of a negative news is giving an impact of a 30 to 40% in stocks. So I think that becomes over exaggerated in certain places. But we are still cautious of more downside in the stock. That's why we started buying in bits and pieces.
Okay, we'll come and talk about what you've started buying, Samir, in just moments from now. But let's quickly go across to our research team. All of them are here with us. We've got lots of stocks to watch out for, carrying forward from Friday, as well as new stocks in news. Nikki, Darshan, Agam, and Somit, all of them here with us. Full house. Nikki, let's start off with some stocks in news.
I'm going to start off with the Yes Bank news, which says that the debt instrument worth more than 20,000 have been put under the credit watch with developing implication by CARE rating. Second in the list, we're tracking Vakrangee, where the company has got an MCA, that is Ministry of Corporate Affairs order for inspection of books for accounts for the last 3 financial years. Some bearing coming on account of this in trade today. Infibeam, as you just mentioned, there has been a clarification where the company has said that it's given an interest-free loan to the subsidiary, and as of March 30, 31st, the balance sheet showed an amount to the tune of around 135 odd crore. NMDC, on back of the development that the company has hiked the price of lumps and fines second consecutive time in the month of September, Kalpataru Power Transmission, which has secured an order of more than 1,000 odd crore from transmission lines in Africa and CIS region. Apart from that, we are also tracking in IRB Infra Developer, where the subsidiary has achieved a financial closure for its 2,200 300 crore project of 4-laning. Also, we are tracking in airline companies. They are expected to be in focus today on back of the development that the ETF prices for October, they've been hiked by 7%. And in terms of bulk deals, we're looking at Rani Engine and Valve there, where the promoter has bought in more than 3.5% stake in the counter.
All right, Nikki, thanks very much for that. Darshan, Engineers India?
Yeah, so this is the largest order that Engineers India has won. It's one of the most awaited orders. So basically, it's a 5,400 crore order that they've got from HPCL. So there's a joint venture between HPCL and the Rajasthan government. And this order, in fact, was awaited in FY18 itself. But due to delays, the management in the first quarter had said that probably this order will come in the third quarter. So at the end of second quarter, this order has come in. Why is this order important? Straight away, the order book surges from close to 7,000 crores to in excess of 12,000 crore. So that's the first positive. It's a greenfield project. That means the margins are much better than it. And it's a combination of consultancy as well as turnkey. Now they're going in for more consultancy because the margins are much better. And since this is a greenfield project and an advanced project, the consultancy margins will be anywhere between 30 to 35% versus the average they've been clocking of 20 to 25%. So that's positive. So on a blended basis margin also, this will be a better operating margins that this project will offer. So nevertheless, a much awaited order and a good order. Engineers India should react with a positive bias today.
All right, Darshan, thanks for that. Agam, Macquarie's put out a note on ITC.
Right. Well, they have turned positive on ITC and they've actually upgraded the stock to outperform from neutral. They've also increased the price target to around 367 from 304. Among the few important reasons behind this upgrade, first one is that the risk-reward ratio on ITC looks favorable, especially in relation to its other peers, which considering ITC has lagged quite substantially in terms of returns. Moreover, the potential of double-digit volume growth in cigarettes could be a considerable upmove, could be something that could lead to a re-rating for ITC. And it's also higher visibility in margins now for the FMCG ex-cigarette business, considering it's starting to see some consistency when it comes to its operational profitability. Also, its FMCG business is valued at around 4.1 times your enterprise value to sales, and this is a 25% discount to that of Britannia's, which is another reason why they're positive on ITC. There is just one overhang right now, that is a clarity on your calamity cess, but other than that, the risk reward looks favorable, which is why they've upgraded ITC right now.
All right, thanks, Agam. And news from the oil and gas space, Salman.
Well, yes, the gas prices have been hiked for the third consecutive time, and this time it has been hiked by around 10% to $3.36 per MMBTU, that is million British thermal unit. Now, this is the third consecutive hike, and now the gas prices are near its 3-year high. So, whom does it benefit? Well, it benefits all the oil producers, ONGC, Oil India, HOEC, Reliance Industries, Vedanta, but it benefits most to ONGC and Oil India because they produce and sell nearly 80% of the gas in India. And whom does it impact? Well, it impacts urea and petrochemical manufacturers, as natural gas is used as a feedstock for these companies. It also impacts the CNG and PNG users, as the cost will go up for them, and also for power sector and sponge iron industry, because gas is used as used for power generation in these sectors.
All right, Salman, thanks very much for that. So many more stocks to watch out for, including ONGC and Oil India. Samir, one stock that Darshan highlighted, Engineers India, and the big order that they won. How big a positive is it from a stock price point of view?
So I think in the shorter term you will see a positive movement, but the order has to be done in 18 to 24 months. So the execution and conversion to the revenues and the bottom line will take a little while. So I think it's a positive in the shorter term, and it might change the trend of the stock after getting such a huge order. But I think on the medium term, still negatives are there, and the cash flow generation is already there, which is, I think, discounting in the valuations.
Okay. That's Engineers India, that's down about 3%. Two stocks, and markets really punishing stocks where there is a hint of negligence on corporate governance. So the Ministry of Corporate Affairs ordering inspection of books of accounts of Vakrangee. J. Kumar Infra is the other one, where SEBI has reinitiated investigation in the Shell company issue. Forensic unit to come in to observe the company's accounts. What's the sense here?
So we attended Vakrangee AGM on Friday, and the MCA audit or the SEBI audit, which might have come up, was already given a feedback that they wanted to have a MCA audit so that the PwC resignation gets cleared on their system if everything comes out. See, if anything negative, I think again the quantity of downside is there and everyone expects it. But if the clearance comes in and then the PwC issue gets cleared out, and the renovations and the whole thing comes out by Diwali, and the numbers start coming back. So I think the upside risk is much more higher than the downside risk right now.
All right, got that. Just stay on with us. We have the management of Infibeam. Caught in the eye of the storm is Infibeam. The stock saw a fall of 70% in Friday's trading session. Neeraj had an opportunity to speak to Vishal Mehta, the managing director of Infibeam, and began by asking him about the steps taken by the company to arrest the fall in the stock price. Listen in.
Neeraj, you see, the fundamentals of the company are robust and very strong. And they're getting stronger by the day. And we're really clueless about how the market operates. But what we do know is that there have been some WhatsApp groups that have carried some erroneous messages, which may have created anxiety and panic among whoever has viewed it. So as a company, what we can do is we have been very proactive in terms of giving the statements and filing it out with the stock exchanges, that all these rumors are baseless. And the company has complied with all regulatory aspects. What we do understand from market sources is that in the last few days, there have been many company stock prices that have gone through a fall and crashed due to some leverage positions of some market participants. So while I cannot comment and have specific information because we do not know the specifics of how the market operates, so what I can tell you is that the company is very strong in its fundamentals, and it's very robust, and it's even getting stronger by the day.
Have you in any ways been in touch with some of your large institutional investors? There were some arbitrage fund positions, of course, which would not be necessarily fundamental in nature, but a couple of other funds, and Access Equity Savers Fund has some large positions in your firm. A couple of global investors, including Nomura Singapore, have about a couple of percentage points out there too. What have they been saying? Are they still on board? Have they still stayed put, or have they sold off into this crash as well?
So, of course, we have been in touch with our investors, and we will, of course, continue to provide more and more and be very transparent in terms of information sharing. So, we've got a very mixed feeling here because on one side, our company's performance has been the strongest there is. And on the other side, we had a terrible day for our investors. We are also concerned about the specific rumors that are spreading through communication channels like WhatsApp, which have, of course, not even created a social problem in this country, which is, of course, being read in the newspaper, but now it's also creating economic problems. And we believe that, while we can continue to be proactive in terms of responding back to this, we also believe that it's important to actually go and figure out the opportunities to trace the origin of these messages through regulatory channels. And of course, it is not in our control. But the fact is that, there is not much that the company can do. Our focus as a company is to continuously focus on the fundamentals. And we should continue building out the business for the long term.
Mr. Mehta, I completely agree with that, but the premise is that a lot of your long-term investors would be worried because of the nature of the fall. You mentioned these WhatsApp rumors twice, and I would want you, during the course of this interaction, to also give some clarifications or 4 or 5 of the rumors that I picked up to. But just one quick thing. The other thing that you've referred in this interaction a couple of times already is that the fundamentals of the company have never been stronger than what they have been in the past. My question to you would be this then, that if I look at your shareholding pattern, promoter holding from March to June has come off. I was looking at the BSE release as of June, and the shareholding pattern does indicate that some of your shares are pledged as well. Can you tell us that if indeed this is so strong, why is it that you haven't thought of upping your stake in the company? Because if it's indeed growing so well, why would you want your stake to come out so drastically? And two, can you also give some details about what percentage of your holding is pledged, and have any of those pledges been liquidated, or do they stand still as of date?
If you look at historically, we have been buyers in the stock as promoters and promoter group. So if you look at the shareholding pattern, you will also see, and all those announcements have been made from time to time again. So neither promoter or promoter group has sold or liquidated a single share. And neither, we have, we have always thought about it from a long-term basis. Now, as far as the investors are concerned, yes, the investors are with us. We have been very communicative to them on the names that you've mentioned. For the same reason that I talked to you about, that if we continue focusing on fundamentals and long term, last quarter alone, we processed more than 10,000 crores of transactions, 40,000 crores on an annualized basis, where we get a cut of every transaction. So we believe that we've doubled that volume year over year.
Right. Mr. Mehta,
and we continue to
Mr. Mehta, please allow me to come in. I am going to get to that point in a bit, because I want you to talk about the business as well, because that's what and a promoter would do, talk about the fundamentals. But just before I get to that, I was actually talking about the shares of the promoters which are pledged, not necessarily of the institutional owners. Have any of your pledges been liquidated in the recent falls, or do they stand put?
No, they are all standing, and none of them are liquidated. And the pledge is a very small percentage. It may be in the low single-digit percentage.
Of course, you can hear out this entire chat at 10:30 a.m. today. Vishal Mehta of Infibeam trying to damage control. Yes. Well, the long and short of it, he of course says that we focus on the fundamentals. We are not looking at the technical factors. We don't know what's happened. Some of it you would find it hard to believe, because when a stock falls 70% on one day, 40% a week ago, and has some 20, 30, 40% falls for a number of times in the past few years, you obviously should be concerned about it. If you're not, then the shareholder should be worried as well. But let's wait and watch. I asked him that if indeed the business is looking so strong, why is it that, would you look to up the stake? To which also he said a yes. Are the stakes pledged? Yes, a very small percentage is pledged, but nothing's been liquidated. Everything stands as is. Promoters have not sold anything. Business is looking very, very robust. I eventually asked about the auditors as well. I said, one of the auditors came off last year, KPMG, after 5 years of association, but we thought that was the best time, etc. So, a lot of explanations, some valid. He's very bullish about the business, and he's saying that the numbers that we're showing will only continue to grow. Time will tell, but frankly, the stock fall has been worrying a lot of people for sure.
157 million was the volume on the back of which the stock cracked 70%. But before we go across and bring in our technical experts on board, onto a special segment, Bloomberg Edge, where Jayesh Khilnani tells us the pattern that a Bloomberg terminal has thrown up. Jayesh, what's the stock on your list today?
Morning, Devina. It's not a stock, but the entire index itself, which is the Nifty index. And so I know probably some good news coming in for the Nifty, because if you have a look at overall all the 50 stocks and how do their relative strength index that stands, that is at lowest level since the demonetization. We'll get to this chart. I'll take you through what the colors and where the levels are exactly. But first, let's have a look at the theory behind the relative strength index, if we can have that one. It measures the momentum behind the price moves, and it also helps you to identify where the overbought and oversold levels are placed. Now, overbought is when the RSI is above 70, and oversold is when the RSI is below 30. With that background in mind, let's go to the chart of the Nifty. So these are some of the buy and sell conditions. You have to buy when the RSI crosses 30 from below, and you have to sell when the RSI crosses crosses 70 from above. What you have on the screen is the blue bars indicate the percentage of the Nifty stocks that are currently trading with an overbought condition, and on the bottom panel the white bars, those indicate the percentage of Nifty members that are currently oversold, and currently that stands at about 24%, which means that 12 out of the 50 stocks are currently oversold. And if I go back in history, that is exactly when it happened in late 2016, which was the demonetization period. Now, after that, we all know that the Nifty made, double bottom, and we saw a substantial rally from there. But this level is significant because in the last 5 years, just about 4 or 5 times such a scenario has happened, and it has taken place very close to the bottom of the Nifty. So essentially, you cannot call this as the bottom of the Nifty, but if you track back historically, very close to the bottom.
How accurate is this indicator?
Devina, like I was telling you, in the last 5 years, only 5 instances or thereabouts have happened where more than 25% of the Nifty stocks have become oversold, and those have in fact been very close to the bottom, and we've seen substantial rallies coming in after this. So depending on the period now, demonetization rally we saw in 2016, and if I track back historically also, so those rallies range from about 5 to 10% on the Nifty.
Got that, Jayesh. Thanks very much for that. We've anyways been a bit delayed in getting our technical experts on board. Let's not delay it any further. Gaurav, Bissa, Ruchit, Jain, both of them join us right now. Gentlemen, good morning to you. I'm going to start off with you, Ruchit, on your index strategy, if you have any.
Yeah, hi, very good morning, everyone. Certainly, if we see the Nifty, Bank Nifty and the mid-cap index, then this entire fall in the month of September is a 5-wave decline. Just in terms of Elliott wave analysis, whenever there is a 5-wave decline, the corrections are usually very sharp. Looking at the chart of Nifty and the mid-cap index, it seems that we are near the completion of the 3rd wave decline of this entire impulsive down move. So usually wave 2 and wave 4, these are 2 waves where we usually see a bounce back moves. So I think we are near completion of the 3rd wave decline. So a bounce back in terms of wave 4 should be seen. It would just be a pullback rally and not the resumption of the uptrend. So in next few trading sessions, we are expecting some sort of bounce back up to 11,060 to 11,100 and 100 range, because these are the minimum retracements that should be seen in wave 4 pullback. But the broader trend would continue to remain down. So at current juncture, one should not create any fresh short positions. Wait for a pullback move, maybe around 11,100. One can again get an opportunity to create fresh positions. The targets then positionally would be around 10,750 to 10,800, which are the 200-day moving averages for the Nifty. So currently we are advising our clients to not to create any fresh short positions. Wait for a pullback move. It would be a sell on the rise kind of market. A wave 4 bounce up to 11,100. One should look to create fresh positions at that juncture.
All right. Gaurav, what's your trading strategy on the index, and does any of the options activity suggest any positional bias?
Good morning. I have a similar view to what Ruchit just mentioned, that we can expect a bounce back from these levels, Nifty and the Bank Nifty, mid-cap index. Many of the stocks are in the oversold zone, so a technical bounce back cannot be ruled out. However, if somebody wants to play for a bottom or reversal, I don't think this is the time. It is always prudent if you give away 100 points before taking a positional confidence in buying or selling. So I would not play for a bottom out process here, but a bounce back towards 11,060, 11,080 cannot be ruled out. I would also add that if you look at the monthly charts in Nifty, we have seen a bearish engulfing in Nifty on the monthly charts, and in last 3 occasions we have seen good amount of correction coming up in Nifty whenever it is at the higher band of the channel. So there's a possibility we may see more pressure in coming days. However, technical bounce back cannot be ruled out. As far as index strategy is concerned, I would recommend buying a 11,100 call option. It has closed on 118, 120. If you get it on 110, one can buy with the stop loss of 95 on the upside. Targets of 145, 150 can be seen. As I mentioned, I would play only for a bounce back. This is not a time to play for reversal.
We're just a minute and a half away. Ruchit, very quickly, we'll elaborate them in a bit, but your 2 recommendations for the morning.
So one buy and one sell I have. Buy is on L&T Financial Holdings with stop below 123 for target of 138, and sell is on Steel Authority of India with stop loss above 73 for target of 61.
Okay, sell is on sale and the buy, Ruchit, is on Larsen & Toubro?
L&T Finance Holdings.
L&T Finance Holdings. Okay. Maybe we just have enough time, Ruchit, for you to explain the rationale behind these strategies as well.
Yeah, so if we see the monthly charts of L&T Finance Holdings, then there is a formation of AB is equal to CD pattern, which is one of the pattern as per the harmonic analysis. So usually when such patterns are formed, a bounce back move is seen, and even in line with our index, the expectation of a bounce up to 11,100, we should see a pullback up to 138, which are the minimum retracements. So one can go long on L&T FH, which stopped below 123 for target of 138, and SAIL has given a breakdown from a triangular pattern on the weekly charts, and if we analyze the volumes in Friday's session, when the prices have breached the supports, the volumes are quite high. So this should lead to another round of sell-off in SAIL. Keeping a stop above 73 for target around 61, one can look to create fresh shorts.
All right, that's SAIL and L&T Finance. We're about 30 seconds left to go for market pre-open. Not much in terms of cues coming in from Asia, because you've got Hong Kong and China shut for trade today. Just Japan and closer to about 0.5% of the gains coming in there. Even for the SGX Nifty, absolutely catatonic. There's nothing that's moving out there. 10,968 is where the SGX Nifty is currently trading at. But for our markets, not just pre-open, but as soon as markets open, there are a lot of moving parts, individual stocks to watch out for. Market pre-open on the index right now suggesting a dip of about 0.75% on the Nifty. Bank Nifty is up about 1/3%, but don't go by these figures. They will consolidate in just a few moments from now, under 10,900 for the Nifty. But individual stocks then, and most of the banks actually in pre-open, are showing you a 10% cut. Again, these are just initial numbers. Kotak Mahindra Bank is down 10%, probably in line with issues related to Bandhan Bank's promoter holding being brought down. And this was the same issue which happened a month or so for Kotak Mahindra Bank. IndusInd Bank is down about 10%. Bandhan Bank is down 20% right now, 452 on the stock price. Z is down 3%. You've got Yes Bank, I already mentioned that, down 10%. M&M is down 2.5%. Vedanta is down 1.8%. Bharti, Infratel, Bajaj Finserv down 1 to 1.5% apiece. HPCL is down about 1% in trade right now. Amongst the gainers, ONGC is up 1.5%. Tech Mahindra 1.5%. Lupin, ITC and Tata Motors are some of the gainers in trade today.
Yes, suffice to say, Nifty Bank could be under pressure. I don't know what Yes Bank would do. Kotak Bank in all likelihood could react negatively. Bring up J Kumar Infra, bring up Vakrangee, couple of stocks on which there are some regulatory orders. A 19% slam dunk on J Kumar Infra. Amidst all that's happening for the company, this adds for the fuel to fire. So expect both the stocks to be down today. J Kumar Infra could have a large slam dunk move in the session. Bring up aviation companies, Jet, Indigo, SpiceJet, ATF prices have been hiked. Likely that they could be reacting further. Jet Airways, 175. Interglobe Aviation about 822. SpiceJet should also come up on your screen, likely to be reacting slightly negatively. About 1.5% lower. But Kotak, I must say, has recovered a little bit from the lows, but these are still moving parts. We don't quite know how the market will take what's happened to Bandhan Bank as something that will happen for Kotak Bank, but likely to be in the red. Just revisit Bandhan Bank once again before we get to the currency markets and the bond yields as well. The Bandhan Bank stays down. I know brokerage notes and some of them have said that they're unfazed by what's happened, but likely that the start will be negative. The rupee and the bond yield should come up on your screen very quickly. Let's see if there is the bond yields are continuing to strengthen the rupee. Some measures announced, not quite helping, about 13 paise drop for the rupee. The bond yields, and I remember seeing a tick of, yes, I remember seeing a tick of 8.01. Now some more strengthening, 7.91 or 7.92. The government's announcements on Friday should be net positive. OMO announcements as well coming in from the Reserve Bank. So lots happening within the bond space, and that is reacting. But I must say, 2 minutes into open, Divina, Yes Bank continues to grind lower.
10%, still holding that mark. But interesting because, Friday post-market closing, you did have those tweets by...
Actually, around market closing, yeah.
Yeah, Mr. Rana Kapoor coming out and saying that he holds it very dear. The shares of Yes Bank are held very dear to him, and he's not going to be selling them at all. In fact, just going to be passing it on to his children. But the stock, obviously, there's a lot that's happening, but market participants not ready to give in just yet. So down about 9.6%.
Looking wobbly. Sameer, I don't know if you've already spoken about Kotak and Bandhan Bank, but since we haven't, what would you do? Bandhan Bank, arguably one of the best performers this year, but this order, well, a bit of a negative. People would probably think that the same would be applicable to Kotak Bank at some point of time as well. How do you approach this announcement, and therefore what would your investment strategy be in both of these?
So I think for Bandhan, I would let the downside come, and this will not resolve in 3 months or 6 months because it's a huge down of the percentage holding which they have to come through. So they might have to go very aggressive on an acquisition or some kind of aggressive measure to take this out. And I think that will go for a desperate call, and that will take the bank further downside on the valuation basis. In that sense, I rather grab on Kotak. So this is a replication negative for Kotak. They are also there, but they have a deadline till October 2019, if I'm not wrong, to bring that down. I think I rather go with Kotak and start investing maybe another couple of weeks later, but not right now.
So is it time bound or is it value bound for Kotak?
It's more of a value bound.
So at 1100, which is what price to book
so
off?
it can be around maybe a 1.6, 1.7. Right now it's around 2.2, 2.3. So I think another 20-30% at least should be a downside, where I'll consider a Kotak Bank to be an investment.
So at around 800, 850 bucks.
You expect it to come to that much?
I don't expect it, but that might be the price where I start buying it.
All right, Gaurav Bissa is, I think, back with us. We quickly go across to him to get some of his stock ideas. Gaurav, we lost your connection before pre-open. Quickly run through your ideas.
The first recommendation today would be buy on Biocon. Breakout has been seen on monthly charts. One can keep a stop loss of 665 and on the upside targets of 685 and on the upside targets of 720, 725 can be seen. Second recommendation would be an Axis Bank, one of the private banks that has not been seen much of a pressure. 3% over addition seen in a weak market. One can keep a stop loss of 606 on the upside, 635 can be seen.
Okay. Do you have a view on Bandhan Bank at these current prices at around 450?
We have seen the pressure coming in the private banks already. It was one of the names that was a little bit resilient. So I don't think there can be a significant fall as such. It has made a bearish flag pattern. The pressure would mount below levels of 540. As long as it's trading above 540, I would be a buyer. Below 540, things can go a little bit gloomy. It can test levels of 510. So I would recommend buying only if it sustains level of 540. For safe players, the ideal strategy would be to buy only above level of 580, in which case the stop loss can be 565 and target can be 635. For the time being, let it just settle out, and if it sustains 540, good for the stock. Else we can see a prolonged phase of consolidation.
By the way, Infibeam is looking like it might have some green on the screen. Let's see if this lasts. About a couple of minutes left for the pre-open rates to settle. But it looks like it'll start off in the green.
After wiping out 70%, I don't know what's left for it to wipe out.
Well, yeah, but you never know. I mean,
it gave up 140 points, came down to a price of 58.
Yeah, but well, some solace. Let's see if this lasts or no. But Infibeam looks like starting off on a good note today. So does Future Consumer, by the way. That stock looks like starting off well. And Engineers India looks like starting off well today, about 4%. After a number of days, though, we might have Engineers India do reasonably okay for itself. Both a fundamental and a tech perspective here. First, maybe a tech perspective. Ruchit, coming on Engineers India, been a laggard of a stock. This is a boost fundamentally. Does it look like a good trade on the charts?
And if I see the weekly charts, then since June 2018, the stock prices have consolidated in the range of 116 to 140. So now next set of directional move would depend on the direction of the breakout. So till this range is intact, the stock is trading near the lower end of the range. So buy setup can be taken with stop below 116. But on the upside again 140, which is the higher end of this range, would act as a resistance. So it's just a range bound trading play. Buy near the lower end of the range and sell as the stock approaches the higher end of the range, which is placed at 140.
By the way, Jet Airways looks like it'll start off weak again, 4% lower, but the others too could likely do that. How much beating can you give to a dead horse? Sameer, or are these stocks not dead already and there's some more downside here? Jet, SpiceJet, Indigo. ATF prices hiked by 7%.
So I'm of the house, and last year I was also the same of the house, where crude I expect a 90-95. So we're still at 83. Another 10-15% is there, and I think that's just a crisis reaching point, and there can be a further downside to these kind of stocks, which are crude consumers. And I think it's more dependent on the crude prices now rather than anything else. So till the time the crude corrects, I don't see any kind of stoppage on the downsides they have, because I've bought SpiceJet at 14 rupees. I would love to see it at again a nearby place where I can buy that. So I'm very positive on crude going up, really drastically up from it.
So not buying at these levels?
No, not.
If you're a trader, would you go out and, I mean, if you had it in your account, would you sell out from your account and wait for lower levels?
I have the lower ones in my account.
No, for somebody who's got a SpiceJet or a Jet at slightly higher levels,
I don't
would you
think
liquidate the positions?
No, I don't think so. This is a place to cut the losses and enter it up. You rather let the crude peak out and add over there rather than adding right now or selling out right now. Because if you're a trader, you still should have a 6 months kind of a horizon in your system. So I think that way, if you have that kind of a horizon of 6 months and 1 year, I think let the crude peak out, average out over there, and then start selling out.
Okay. Must say the selling in Yes Bank too has stemmed. By the way, just before we take the all you need to know, some flashes that have come in as well. It's interesting that they're talking. This is very interesting. I think from a press release, if I'm not wrong, there's some talk of gross NPA numbers, net NPA numbers coming out. We'll get to this in a bit, but surprising that if they have done this and given out some gross NPA and SMP numbers before the Q2 numbers are out, you don't usually see this happen, right? Gross NPA is at 1.35% for Q2 FY19. How is it that Yes Bank is doing this before the numbers are out? This is very interesting. The stock still under a bit of pressure. But, well, let me just read out the flashes and then we'll get to talk about this as well. Gross NPA is at 1.35% for Q2 versus 1.82% for Q2 FY18. Loans and advances grew by 61%. Analyst conference call is scheduled today at 4 p.m. Boy, this will be an interesting one. But, yeah, I'm just surprised that they've done this. Unaudited numbers, but out in the open there on the Bloomberg terminal as well. So all the flashes on your screen too. And this is Yes Bank giving out some numbers ahead of the Q2 numbers, out of the official release of the Q2 numbers. Anyways, we'll get to more about this in just moments from now. Minutes away from Market Open, let's tell you all that you need to know to stay ahead in trade today. First up, a snag in Bandhan Bank's branch expansion plans as RBI says the bank cannot open new branches without prior permission. The stock likely to start off 15% lower.
Yes Bank's debt instruments worth 21,371 crores have been placed under the credit watch with developing implications by CARE Ratings.
Vakrangee gets Ministry of Corporate Affairs order for inspection of books of accounts for the last 3 financial years. The stock 5% lower in pre-open.
Engineers India receives its largest order ever worth 5,000 crores for execution of HPCL's Rajasthan refinery project.
Infibeam Avenue says it has given interest-free secured loans to its wholly-owned subsidiary NSI Infibeam Global, which are repayable on demand. The management refutes all of these allegations in a conversation with Bloomberg Quint. The stock starts off 10% higher.
And in brokerage calls, Macquarie upgrades ITC to outperform as they see improving cigarette volume trends.
Well, interesting. Yes Bank, and we'll talk about this in moments from now. In fact, Dhananjay will be joining us any moment. It will be lovely to have his view as well. But just one quick thought. Ruchit, as a Gaurav Bissa, as a trader, Yes Bank, how would you approach this now at 180?
It's been falling significantly. It's below the long-term average, 200 weekly average as well. So if somebody wants to buy on dips around 170 to 175, have a stop loss of 163, 164 on the upside. A pullback towards 190 can be seen. I would play on a very soft note, would not be very aggressive in the position sizing, but any dip towards 170 to 175 can be used to build fresh long positions.
All right, about 1.5 minutes left to go. Ruchit, what's your sense in terms of your top call?
So I think yes, in terms of market, I think we would see some pullback move that we spoke earlier. But one comment on these stocks such as Yes Bank, Infibeam, or even say Diwan Housing. No, I don't think that anyone would have predicted such a sharp fall in the month of September for these stocks. 50%, 70% fall in a single trading session was certainly there was no theory through which we could have predicted that. So what is happening at current level? There have been many traders who tried to do bottom fishing in these stocks just because of the sharp correction that had seen, and now they are stuck out with their long positions. So any kind of pullback moves that we would see in all these names which have corrected sharply, there would be immense selling pressure from those traders who have got stuck at higher levels. So one should not watch out for any kind of one should not try to do any kind of bottom fishing over here. This volatility in these names is likely to stay for much longer time going ahead. I think there are many other names which are showing outperformance, such as names such as Biocon or some other pharma names. So I think one should clearly stay away from names such as Infibeam or Yes Bank or even Diwan Housing from a short-term trading perspective.
Gaurav, your top call?
It would be Biocon, as I mentioned, that breakout on monthly charts followed by some overhead we saw in the previous month. I think it can be a decent candidate for 7-8% up move. I would recommend Biocon as my top pick for today.
Ruchit, your top call for the day, 10 seconds.
L&T Finance, which I had recommended from a short term, I think even for intraday, I would recommend that. For intraday, the levels would be different. Stop would be 125 and target would be 135.
Okay, so L&T Finance Holdings and Biocon from both our experts. This is how the markets are starting off this Monday morning. Some pressure on financials for sure. And that might weigh in, yes, weighing in on the Nifty Bank for sure, quickly down to 1%, the Nifty Bank. Is it dragging the other indices along with it? Not quite, but the Nifty Bank certainly under a bit of pressure. Now the Nifty 50 about 0.25% lower as well, but the Nifty Bank clearly in the eye of storm. Quick mid-cap and small-cap check, but I will go straight to the heat map really and see what's happening to financials. Kotak Bank, Yes Bank and the likes. Bring up the heat map on the screen and let's see what's happening there. Kotak Bank is down 9%. This is a very steep fall for Kotak Bank. Yes Bank continues to grind lower. Indiabulls Housing is down now. IndusInd Bank in the eye of a storm too. So financials clearly getting badgered. Axis Bank marginally lower. We don't have too many stocks which are weathering the storm, but for IT and to an extent ITC, which is up about 1.5%. So this pack is full of defensives right now. Has some IT and pharma names and ITC and GAIL, but look at the financials. They're getting roiled. Indiabulls Housing Finance had 1 day of gain, but again down about 4.5 to 5%. Yes Bank, a lot of disclosures down about 6%. Remember, there's a con call today at 4, and we'll get you all the analysis on Bloomberg Quint as well later on too. But Kotak Bank too, clearly grinding lower in the session today. So banks certainly under pressure. Semblance of sanity on the Sensex right now, 0.2%. But let's wait and watch what happens during the course of the day, the course of the morning rather. Very quickly before I hand it over to Devina, 2 or 3 pockets that I want to highlight at the broader end of the spectrum. Stocks in news, maybe a couple of trends. Firstly, J Kumar Infra should come up on your screen. The SEBI's audit probe, that stock starts off 20% lower. No surprise here and stays down. Bad news for aviation companies, and all 3 start off lower. Jet Airways clearly hammered the most, 3.5% ATF prices hiked, and that stock continues to reel under pressure. Last but not the least, a couple of other stocks in news and stocks in focus. Infibeam marginally higher, but not on upper circuit. It was looking like starting off 10% higher, not so much. Yes Bank, we already spoke about 3.5% or 4% lower now. Devina, what are you spotting?
Infra, that stock's down about 20% on the back of the SEBI investigation. The stock is at 162. The other one is the PC Jewelers, is down 12%. You've got the likes of a Marksans Pharma down 10.5%. Eros International is down 10%. You've got the Bajaj Hindustan Edelweiss now at 178. So the stock's given up about 6% today. But Rampur Chini is down 6%. So the entire sugar space once again under a little bit of pressure. The likes of an Adani Transmission is down about 5% So their plea has been dismissed regarding the bidding process of supply of PNG and CNG in 3 Ahmedabad areas. Parag Milk Foods is down 5%. Vakrangee is down 5%. Quality is down about 5%. So a lot many more names actually in the red. VIP Industries, HDIL, Adani Power is down 4%. VIP Industries, like I mentioned, is down 5%. 8K Miles is down about 5%. So right now, it's the advanced decline ratio 1:3, clearly in the tilt of the declines. IL&FS Transport, on the other hand, is up about 6.5%, along with Infibeam, which is up 5%. We already spoke about that. Few other names like Godrej Consumers and Engineers India. So on the big order, the stock is up about 2% in trade today.
Okay, so before we let you go, we already spoke about Yes Bank, I know, at 175. Are you a buyer?
So we've started buying at 180, 185, but still I see a further 10 to 15% downside if today certain things are not sorted out. And
well, maybe we'll get to know in the conference call as well, and I'm sure you'll be logged on there too. Sameer Kalra, thank you so much for joining in today and giving us your perspective. Really appreciate your time.
Thank you.
Okay, so that's it. But the stock of the morning has to be arguably Kotak Bank. You can argue Bandhan Bank too, but Kotak Bank down about 9%. Financials underperforming. Great time to get in. Dhananjay Sinha, he's head of research, economist and strategist at Emkay Global. On a day like this, really important and really good to have you, Dhananjay. What's happening here? The most loved space, suddenly now the most hated space, and in a lot of stocks, there are fundamental reasons for this to happen. Let's discuss each of these topics one by one. Firstly, Kotak Bank and Bandhan Bank, because they are in the eye of the storm. What have you made of this? What kind of impact can it have on these two entities?
So I think clearly the signal from the RBI is very clear that the promoters have to dilute their stakes, and I think RBI had given a very long time for instance to Kotak Bank to actually to enact that, but I think that has not come about, and whatever Kotak Bank had actually proposed by way of convertible debentures, I think that has also sort of not been accepted. So clearly, I think RBI through the Bandhan Bank sort of communication also, it is coming out very clear that there has to be a dilution and sooner than later. So essentially, these banks will be forced to dilute either by selling the stake in the market or through through placement, etc., or they will need to acquire. So I think that the window of opportunity is actually shortening and very quickly. So I think the pressure on the stocks hence will be there. It will be very important for the banks to actually come and actually indicate to investors how they plan to do about it. So how do they plan to go about it? So essentially that communication is there, and as long as it is not there, I think the stocks will be under pressure.
You expect, Dhananjay, that instances like this would keep an overhang which could be of a slightly longer tenor than what the markets might otherwise be anticipating? For how long would something like this stay as an overhang? Because clearly, even if the stake sale has to happen, it's not a matter of weeks before it will happen. It's probably a couple of months at least, if not more.
Yeah, I thought December was the terminal period, the terminal month. So, as I said, the window of opportunity is squeezing. So, I think eventually, if the banks do not come out with a clear strategy of how do they want to do this, either by selling it to a certain sort of private equity, or maybe sort of acquiring some bank, I think that uncertainty will be there, and it is not a very quick fix. So it will take time. So I think maybe 3 to 6 months time is one can consider when first the decision has to be made and then it has to be executed. Acquisition of a bank, for instance, also has to be the target has to be identified, then it has to be executed. A lot of procedural stuff that will need to be done as well. So I think this overhang, you're right, actually we can actually endure longer than what many of us think.
Dhananjay, the broader financial space as well. Now, yes, IL&FS has probably been the tipping point, but there were some instances of this already being visible. You've spoken about it in the past as well. Do you think the falls and the corrections that we've seen, even though the stocks had run up quite a bit, is overdone, or would you reckon that this is just a normal course correction and we could actually see some more pain in the broader financial space? Keeping in mind, of course, the quote-unquote resolution that has happened on IL&FS in the Saturday's meet.
So I think this is a phenomenon that is pervasive across the NBFC space. We have to look back into cycle, let's say mid-95 onward, 90s onward. So we saw a mushrooming of NBFC then as well, and the tightening in liquidity scenario. This is essentially an arbitrage play. So essentially, whenever you have a tightening liquidity scenario, such kind of arbitrage gets squeezed, and the market had given significant valuations to NBFC, so that is actually normalizing, and I think this problem will sustain. because IL&FS might be an individual example, but you see it across most NBFC space, especially asset-backed NBFCs and housing finance companies, that they had actually enjoyed considerable amount of expansion in margins and ROAs, especially when the demonetization happened, when short-term yields went down, and many of these NBFCs relied on non-bank sources such as mutual funds, etc., to gain out of the ALM mismatches. So I think that is getting squeezed, and I think we are at the starting point, I would say. My sense is that you have a liquidity deficit that is emerging. You have a deficit in the LAF and in the banking sector. There is a lot of clustering in bank credit that is happening. So I think this is going to sustain. I think it will sort of erupt at various points of time across multiple NBFCs, especially those that have very large ALM mismatches. So I think I would say if you look at the authorities, there has been response from RBI, there has been a response from coordinated response from government as well. Government said that we'll borrow lesser. RBI said that we'll sort of give that liquidity window and purchase through OMO. So I think these are all reciprocation to a situation that is building up. So my sense is that if there is a sort of a rally based on such announcement, I would sell them, especially in the NBFC space. So in the overall BFSI space, my preference essentially remains for banks who have growth capital and have very well managed asset liability management. So I think asset liability situation for the next two years. So I think that is what I am focusing on.
Interesting to see, what the financial space and the implications it can have. It's an interesting data point, but just to highlight it, 10 years ago in the month of September during the Lehman crisis versus now when we have the crisis within the financial space yet again. I wouldn't call it crisis yet, but the kind of performances that we've seen on the indices, on different various indices, Nifty for that matter, in September 28 during Lehman crisis was down 10%. Currently, with what's been happening in the financial space as a whole, the index is down about 6.5%, but the sell-off is more pronounced and probably in line with the similar kind of cuts we saw in September 2008. So Nifty Junior was down about 15%, it's down about 13% now. Mid caps and small caps are the heavy losers. In fact, the small cap space down 20% already in this month. But Dhananjay, just getting a sense from you in terms of the overall market mood right now, is it as dire as it looks to be?
So I think our view has been very consistent that the broader market will be at risk. Remember, we had a discussion on mutual fund flows and retail participation. We had taken a view a year back is that this flow into mutual funds and retail participation is not structural as most people thought. And we have seen that actually coming off. So, the incremental fresh net buying of equity mutual funds have declined from something like 20,000 crores in August 2017 to currently about last month was about 5,500-6,000 crores. So there is almost like a 71% decline out there. And my sense is that as the NAV, as the mutual funds NAV start reflecting and it becomes consistently negative, as is likely, I would say that there might be risk to SIP flows as well. So if you look at it, the benchmark indices may have actually fallen by 6.5-7%, but you look at the mid-cap index that has fallen by almost like 3 times that, or let's say around 18%. And if you look at the small cap, it is down 25%. So in terms of the elasticity versus our sensitivity of broader market to benchmark indices are much higher. And my sense is that even after the correction, the valuations versus the benchmark is still higher. So I would say that if you look at the mid-cap index, it's still about 30-40% higher than the benchmark index, and typically, and my view is that eventually it will become a discount of 15% or so. That is a situation that existed before 2014. So I think the broader market will need to correct somewhat more before one can think about valuations and start picking up. So there is a correction that has happened. It might continue for some more time, and I think elections, etc., will keep the keep the situation somewhat uncertain.
Overseas investors had pulled out about 61,000 crores during April to June.
Sure.
Now, in the month of September, we've seen that a high 21,000 odd crores. That's the highest in the last 4 months. From the equity markets, FPIs have withdrawn about 11,000 odd crores. Is that trend likely to continue? Are we likely to see more significant numbers in terms of the outflows?
So I think our view has also been that, because of the global liquidity normalization, and that is getting far more stronger with Fed dropping the accommodative view. And our view is that if the normalization in Fed rate and balance sheet of Federal Reserve continues, the risk to emerging market flows would be there. So that's been the view for the last 3 years. So that is actually gaining momentum, and we are seeing that this year there has been a sort of outflow in FI flows, and I think that is reflecting in the currency market behavior across emerging markets. So I think will continue. The only saving grace that India had was that there was a very strong retail participation, so the domestic flows were exceeding were very strong. So if you look at the proportion of market turnover, mutual fund had increased from roughly about 7% or between BSE and NSE to about 16% odd. So that is sort of starting to dissipate, and also in terms of fresh money coming through mutual funds, that has, as I said, has declined. So I think both from a flow standpoint of FI flows and domestic flow, I think there has been a sort of a moderation, and that is impacting the valuation. I think the valuations were still fairly high. The correction in the benchmark indices at 6.5–7% is very shallow, I would say, compared to the all-time peak that we have seen. I think key thing to really note will be what is the earnings trajectory going forward, and we'll have to see whether the strong number that we saw in the first quarter, thanks to the favorable base effect of last year's, which was a contraction in terms of growth, whether that sustains or not. And my view is that we are inching towards somewhere around 8 to 10% earnings growth versus for the Nifty and Sensex versus consensus estimate of about 25%. So I think earnings downgrade will still continue. So basically you have earnings and the flow dynamics which are not very favorable if you look at the current scenario.
Points that I'm going to pick up from your answers. One, in terms of the earnings, do you expect a significant downgrade in terms of the one-year forward PE for the Sensex? I mean, trading at about 19 times. It's already come down to about 17 times. But is there further pressure in terms of the valuations there? And do you expect, you spoke about mutual funds, considering the risks in the market right now and the overhang that we're seeing, do you expect significant redemptions to occur, for mutual funds?
So, that has been my view. So we have said a year back there is a risk of redemption if the market undergoes a correction. So there is a self-fulfilling virtuous cycle on the way up that has been seen since 2014. And historically it has lasted for 3 years, and we have crossed that 3 years, and as the correction happens it becomes a vicious cycle on the way down. So we'll have to see how the retail investors actually participate. So based on that, I think the key risk that I see is for the broader market, and you can see further correction out there. As far as the benchmark indices are concerned, I would typically look at the trailing multiples. So trailing multiples are down to something like 23 times or somewhere there from a peak levels of 26 times, 25, 26 times. So I think the benchmark is corrected only 6.5%, so that's not significant. So essentially, if the forward is looking like 18% or 18 times or so, I think it is still pricing in a very strong growth for the next year, for FY19 and FY20. So the last time I saw it was 25% for FY19 and 20% for FY20. I think there will be significant downgrade in those as well, because in the last 4 years there hasn't been much growth, and I think the average would be something like a compounding of 1 or 2%. So I think there is a possibility of a downgrade. We see those coming from rising raw material cost, decrease in operating profit margins, rising financial costs because of rising interest rates. So I think these are the factors that will sort of tone down expectation. On the positive side, we still have a significant reflationary impact of government spending. So that is the only thing that has been pulling up the top line. So I think it's a mix of things. My sense is that on overall basis, the margins will be under pressure and earnings will need to be downgraded.
Add to that the forex element as well because of the currency and maybe the impairment losses too.
Yes, absolutely.
Yeah, I think there's just such valid points that Dhananjay Sinha is making right now. Dhananjay, thanks so much for joining in today and giving us your thoughts. Really, really appreciate your time today.
Thank you.
Just watch out. I mean, just the one saving grace for us was the micro and the earnings picking up. Now there is uncertainty over there. We're not saying it is gone, but there is uncertainty there. There's no reason for an 18p multiple. We might be at 17.5 currently, but I think most people will say there's no reason for these multiples to last.
You should look at the S Bank. It's up 3.5% now. So a stock which opened lower now has moved towards the highest point of the day, 192, 5% now higher for Yes Bank.
Good for that one. Diwan Housing is also marginally in the green, so that helps some sentiment cause. But let's wait and watch what happens during the course of the day. The Nifty Bank too has recovered a little bit of lost ground. However, let's take a break. On the other side of the break, the latest gas price hike will take effect today. How will it benefit ONGC's gas business? We'll hear it out from the chairman and MD, SASHI SHANKAR, and get an analyst view on the impact of this gas price revision for not only the oil and gas companies, but allied industries as well. Probal Jain of IDFC Securities will be joining in and talk about the cement space a bit later on after that.
चलो उड़ते हैं आसमानों में, क्यों बैठे रहे हम भी बंद मकानों में। रसोई से दुनिया की राह जरा तक ले, दूर देश देखे ख्वाब जरा चख ले। जब साथ है सरकार तो फिर क्या डर है, खिड़की है खुली सी, खिड़की है खुली सी, उड़ जाओ गर्दम है, चलो उड़ते हैं आसमानों में, चलो उड़ते हैं आसमानों में।
स्काई संचार क्रांति योजना, जुड़ता छत्तीसगढ़, बढ़ता छत्तीसगढ़।
Good news guys, got a promotion and a damn good raise.
Congrats बेटा।
Congrats मेरी तरफ से भी।
From mama too.
वाह, रेज, अब तो इंश्योरेंस पॉलिसी ले ले।
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या, चूज वही जिस पर हो पूरा भरोसा।
वीरू, go for convenience. My company is online, quick and simple.
बेटा, बट पॉलिसी समझाएगा कौन?
वेबसाइट पे सब है पापा। I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है।
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना, same choice. LIC.
LIC ट्रेंडिंग विद टाइम्स, 62 सालों से हर जनरेशन की पसंद।
with IndianOpen right here on Bloomberg Quint. By the way, the markets have just moved into the green, which is not bad news. Marginally in the green for the Sensex, the Nifty too for a second bobbed into the green. Bajaj Auto, the stock marginally higher, the total sales at 5.02 lakh units, which is a growth of 17% versus the 4.28 lakh units, and was much higher than our estimates. The domestic sales much higher than our estimates of 2.81 lakh units as well. The overall estimates 4.72 lakh units, and the total sales at 5.02. So positive news for Bajaj Auto. Positive news for some of the other oil and gas names as well. ONGC is finally happy. The country's largest gas producer says the recent hike will help it break even. Chairman and Managing Director SASHI SHANKAR spoke to Bhanvi Arora and said that he expects crude prices to remain volatile through the year. Here's a small slice of that conversation.
See, it has increased from 3.06 to 3.36. Last fiscal, our cost of production was around $3.50 per MMBTU. And see, cost of production depends on many factors. If you look at our capex, more than 50% of capex goes towards exploratory and development drilling. Over the last 2-3 years, the services costs have drastically gone down, and we have contracted all these services for a long-term contract. So I have a feeling probably at this price, we should be able to break even.
Okay. So by when do you expect the gas business to be profitable?
So we'll have to work out that number crunching, we'll have to do it. So what I said, probably at this point in time, we should be able to break even. So kind of, and maybe in the next this gas revision takes place, and that's the time should be making profit.
So Brent crude is at $82 per barrel. Now, given the global situation, do you think that Brent crude will remain above $80 per barrel for the rest of the financial year?
See, for quite a while it was trading around $70 a barrel. And this recent increase in crude oil prices primarily it is because of the ongoing standoff between the US and China on trade tariff, and again the reimposition of ban on Iran by US. So all this will depend on how things unfold in future. If on this positive development takes place, then the prices might come back to the same level, say around $70 or so. So I personally feel it. If everything is normal, then the crude oil price should be range bound between $60 to $80.
Okay. So the petroleum subsidy decided by the government is around close to 25,000 crore. Now, given the surge in the crude prices, subsidy will fall short. So has there been any communication with the government to share the subsidy burden?
No.
So would you maintain your production guidance for FY19, or would you try to increase it given the surge in crude oil prices?
See, as a national oil company, we are not only looking at making profit. Our country is a hugely import dependent. So all the time, this is our effort to increase domestic production. And so presently, whatever we are doing it depends on the what is the reservoir potential, and unlike other majors, other companies, so we don't temper with that production volumes depending on the oil prices going up and down.
Now with the HPCL acquisition, you turned into a net debt company, but post that in the first 4 months of FY19, you were able to bring down your debt by more than rupees 8,000 crores. Do you think that the company would again turn into a net cash company by FY19?
In future, yes, because the crude remains at this level. But the timeline you're saying, FY19, I think I'll not be able to tell you for sure. But yes, in the next couple of years, we should be again a debt-free company.
Okay. So nearly 8 months are done with the HPCL acquisition. What kind of synergies are we seeing with this acquisition?
No, we have team working on this. So to start with what we have done, we are trying to find out the synergy at product level. And many of the things have already been implemented. Some of the things are in progress. And at the structure level, that will be the next step. So that will take some time.
Okay, so it's definitely got ONGC in high spirits, but what does that mean for the entire space and the end users and the allied spaces? Let's put that question to Probal Sen, who tracks the space very, very closely from IDFC Securities with us in our studios. Probal, good having you. Thanks so much for taking the time out.
Thank you for having me.
First off the bat, we were talking to the management of ONGC. Much anticipated, finally out. What does this mean for the company? What does this mean for business and eventually, of course, for earnings and stock?
Well, from ONGC's perspective, obviously, the fact that the environment has now changed over the last 6 to 9 months, if you see, from a trend where domestic gas prices were continuously falling to a situation now where gas prices are, at least to a certain extent, increasing every quarter. Or every 6 months rather. It's obviously something that's a positive from a earnings perspective. And it is more important because if you really see where their next leg of production growth is coming from, that is also from the natural gas space. So even if they don't get too much of the premium gas pricing for some of the production, even for their core production, the fact that gas prices have started rising up is obviously a bit of a positive. And from an earnings perspective, I think this 10% increase probably translates to not more than a 2 to 3% EPS impact on an annualized basis. But if you cumulatively look at the kind of impact that gas price increases will have, you're obviously looking at a fairly strong FY20. Leaving aside the impact, of course, of subsidies and all of that, if you just take this event into perspective, that is obviously a big positive. Because almost 80% of their production growth over the next 5 years will also come primarily from the natural gas space. So the delta, therefore, in terms of their earnings keeps going up as we keep, revising these prices upwards.
Interesting.
Sorry.
No, but just wondering, so maybe finish your point and then I have a follow-up question to that.
Yeah, so the other point is obviously from a consumer perspective, obviously it means that, effective gas costs will continue to go up over the next couple of years. If you really look at the kind of trends that we are seeing in crude prices and of course the fact that gas prices at the end of the day are linked indirectly to crude price trends, then obviously we are seeing that at least for the next 12 to 18 months, gas prices in the country will continue to go up. Because domestic gas costs are going up and at the same time the share of LNG in our overall supply portfolio also continues to go up. So from a consumer perspective, unfortunately, the effective gas cost will continue to go up. The flip side to that is that if you look at what alternates a gas consumer has, which is to say the liquid fuels, those are actually going up even faster. So at the end of the day, the competitiveness of people who are selling gas, whether it's city gas distribution units or even Petronet LNG, which is at an earlier step in the value chain, for them, the competitiveness doesn't get hammered, even if, as long as gas prices, keep increasing by maybe 9-10% every 6 months. I think that's a shock that consumers can probably absorb, or the system can absorb rather.
Interesting. So, the conundrum for anybody who wants to invest in ONGC, and when I speak to a few of your peers, a few of the market men, the opinion is split right down the middle. A bunch of people believe that it's just very difficult to turn very constructively bullish on ONGC because a lot of price movements happen in anticipation.
Yeah.
And there is always this overhang, even though the government till now has left it untouched, there's always this overhang that if crude were to go up, then at some point of time, some subsidy overhang could come out and hit ONGC, and therefore don't go out and make a big constructive bull call out there. Are you different in that sense?
Well, I don't know if I'm different. The way I would put it is that there is obviously a conundrum in the sense that valuations obviously reflect a scenario where we have gone back to every company sharing subsidies. There is no price increase that is happening. Nobody's making any money, which is obviously not the case. But that's the kind of environment that the stock prices will tell you. If you look at valuations across the space today, just to bring OMCs into the discussion, if you strip out the valuations for refining, petrochemicals, pipelines, and all of the other businesses, marketing is effectively trading at a negative EV for IOCL. Just to put things in perspective, it's trading at somewhere between 1 time to 3 times EV EBITDA. So there is a sort of a fear, and there is a sort of a sentiment that there's too much uncertainty. So irrespective of what my numbers are telling me, I'm not going to actually put money in the stocks. I think that's probably what you've got to look at. And it's very difficult, therefore, to talk in terms of pure numbers, because even if you build in, let's say, $15 to $20 per barrel kind of subsidy scenario, let's say that in 4Q the government is forced to put some subsidy on ONGC's numbers, the net realizations of $60 is still $11 to $12 higher than the average realizations made in the last 11 years for ONGC. So from an earnings perspective, there is no way that you actually see any sort of decline. You are going to consistently see an improvement in terms of their consolidated earnings. So from a valuations perspective and from a multiple perspective, it offers extremely attractive value.
And growth looks...
And growth. Now, with growth, the problem is that their historical baggage tends to weigh on a lot of sentiment. You know, they have not been the best when it comes to maintaining or meeting their guidance on production. True. You know, in the past. True. So despite the fact that even if they meet, let's say 40 or 50% of the guidance that they're giving for the next 5 years, there is huge amount of value. People are still unwilling to sort of, you know, put that premium on belief, let's say, as far as ONGC is concerned. So unfortunately, what really is going to pan out is that once the elections actually happen in the next 6 months' time and ONGC continues to deliver, let's say, a few more quarters of good earnings growth, then that belief will come back. Because at the moment, any regulated industry, if you really look at, particularly the oil and gas sector, there is obviously a little bit of apprehension about actually touching it, irrespective of what the valuations are telling us. I think that's where we are today.
Okay, interesting. You know, I have a couple of other questions as well, and then we'll wrap up the show with this. Since you brought OMCs, and before I get back to gas, because I would want to talk about the IGLs and the MGLs of the world as well. OMCs, would you believe that these now form, in a manner of speaking, companies which can be bought as cyclical? So when crude is on its way higher, even if the valuations are mouth-watering, just hang on for a bit, let crude trajectory slow down a bit, and then you go out and buy because valuations are in your favor. Are you playing them that way, or would you be at the current point of time sticking your neck out and telling some of your large clients to go out and make investments there? Because I know I can't fault you on valuations. The only thing I can fault you on, if you're making that call, is that what if crude were to inch up from the current 80 to 83 to about 90 odd?
Yeah. No, I think that's a valid point. But to be honest with you, at these valuations, as I mentioned, that we are already at a scenario where you are factoring in that they are making negative marketing margins, which is not the case as far as retail fuels is concerned. If you look at the Q1 FY19 results, for example, and that provides a good context, margins were actually lower by about, I think, 60-70 paisa off their normalized levels. But overall marketing margins actually did not decline as much because there are other products that they sell as well, which is somehow lost in the conversation sometimes, where we tend to focus only on the petrol and diesel margins. The fact is that there are other unregulated products on which they are still able to pass through the cost increases, and on an overall blended basis, they actually still delivered a pretty reasonable quarter. And what's going to happen is even in Q2, you are actually going to see inventory gains offset some of the damage that is happening from the other areas of the business, and even normalized marketing margins have actually improved by about 30-40 paisa each for petrol and diesel. So if you look at what retail prices are reflecting today, they are already reflecting probably a 75 to a 77 kind of range, if not, because it all happens on a 15-day rolling average, as you would know. So yes, crude going to 90 is obviously a big problem. Not, you know, frankly, if crude goes to 90, the oil and gas sector will be the least of our problems as a market. Let's put it this way, but having said that, the valuations at this point of time, you are probably looking at maybe a 5 to 7% downside that you're going to have to live with. But what we have been advocating is that if you look at the core business and even building in some reasonable growth assumptions going forward, you can still make money if you hold on for a year or two. I mean, nobody can really, you know, time the investments down to the last 1%. But at this price, we would be very comfortable entering at least an IOCL or an HPCL, if you look at the kind of valuation gap that's opened up, and sort of, you know, holding on for about an 18-month period.
The best investment in the oil and gas space right now, OMCs?
From a valuation perspective, yes, but from a quality perspective, I would probably still go with the GAIL, to be honest with you. I think the fact that it is the only outperformer, you know, other than Reliance over the last 12 months, doesn't dissuade us from saying that their businesses probably have the most promise. If you see the kind of earnings growth that we expect over the next 3 years across our coverage universe, GAIL probably is one of the highest, even on a fairly healthy base, with subject to the fact that, you know, all this talk of unbundling and asset separation, our understanding is that nothing much is happening on that front. So as long as this remains one consolidated entity, I would say GAIL probably offers the best fundamental business strength over the next 2 years. But from a valuations perspective, yes, the delta that you can get from a risk-reward perspective is obviously very, very good in the OMCs.
Okay, just final question coming back to the topic, which is the gas price hike. What about the IGLs, MGLs of the world?
So, I think IGL historically over the last, 12 months has shown the most promptness, if one can call it that, in terms of passing on the price increases. And I think that is something that's very encouraging. The confidence that they have in their market being able to absorb price increases, I think remains. And the fact that every time, even after passing on the gas cost increase, they have, sort of managed to report double-digit volume growth is something that encourages us. We would wait for what kind of price action MGL and Gujarat Gas take, because it's important to remember they have to pass on the impact of the rupee as well, not just of the gas price increase, to see what their margin trends are like. But as I was mentioning earlier, from a customer perspective, to absorb this price hike, we don't see that much of a challenge, because the alternates are anyways costing much more today. So I don't think it'll have too much of impact of volume growth.
Okay, Probal, great having you. Thank you so much for taking the time out and speaking with us today at Bloomberg Quint. Appreciate your time. That's an interesting view. Probal Sen of IDFC on the gas price hike and the impact thereof. Before we wrap up the show, let's talk about the cement space. FY18 turned out to be a challenging year as the cement industry faced multiple disruptions like sand mining ban and petcoke, as well as rising fuel prices. FY19 may be better placed, says Heidelberg Cement CEO and MD Jamshed Nawal Cooper in a conversation with Nikki Mirchandani.
For us, we are quite agile with our fuel mix. So we alter our fuel mixes based on the commercial value for petcoke vis-a-vis the domestic coal. As of now, domestic coal is close to around 270 rupees a gigajoule to 280 rupees, and petcoke goes about to something like 350. So we have already altered our mix, so it won't be too much of an impact which you would see going forward. So we have earlier we were 70% petcoke. We have almost reversed the situation.
All right. So also I'd like to understand a little bit about GST cut on cement, if at all the decision comes through, which has not been the case until now. If that comes through, would that reduce the company's ability, or you think the industry's overall ability to go ahead and increase the price that is usually seen post the monsoon season?
Not really, basically supply demand decides the prices. So if the GST has to come down, if it is to come down to 18%, whatever is being talked about, then companies will reduce the prices to that extent. Companies would also want demand to pick up. If GST is reduced, there will be definitely some buying in which will come in. There will be some more demand which will accelerate demand. So I think the companies are not going to lose in that in any way. So maybe the price increases could be a little soft later on, maybe not be that frequent, but anyway it will be getting compensated by way of growth in volumes, I would say.
All right, so talking about volumes then, what is the kind of incremental volume that we're expecting for the quarter ended September as compared to that of the quarter that just went by?
Normally quarter ended September should be subdued a little because of the rains and things like that, but I think the demand in central India for Heidelberg, at least, it has been good. So it should not see too much of a variation over the previous quarters or on a like-to-like on a year-on-year basis. I don't think there should be much of a difference in that.
All right, so also I don't
think it is going to be soft in any way.
Sure. So I would also like to understand a little bit about your greenfield project in Gujarat. What kind of capacity is expected to get added with that, and when that project is expected to be commissioned by?
Let's see, it is at a very nascent stage. It is not going to happen in a year or so. But yes, the intention of the management is to go there and in future and develop that greenfield project. So I cannot tell you a time frame, but when the time is right, I think the company is waiting for some approvals which are there. Once those come in, and then the company can definitely review that.
Sure. Also, the company in the con call has spoken a little bit about adding 10% of capacity with refurbishment and debottlenecking. I'd like to understand when is that the process is expected to be completed by, and we can expect this additional capacity. Also, if you could give us a little bit outline your capacity by the end of FY20 for that matter.
See, those are all, realignment of the equipment, okay? So optimization, we are doing the optimization part. So that is, which requires a very small nascent capex which comes in from time to time. If today we are at somewhere around 92% on cement, but in clinker capacity, we are close to about 80% utilization. So there is a lot of headroom for us. Going forward, if I say my clinkering capability, I'm not worried about. For grinding unit, we are already taken up a project for some renovation in our mills, and that will be over by end of December. So that will see us some improvement in our grinding capability in our central India plant. And that I think we can take up in 2 or 3 headroom for 3 years. Going forward, we can do every year one small changes and keep going on and not be really concerned about hitting the ceiling at all at any point of time.
All right. With that, how much do you expect the capacity utilization to go up maybe by FY19 as compared to FY18?
See, normally I would say that capacity utilizations, if we can manage at 90 plus, that is good enough because that will be on a new rated capacity thereafter. So we have to go for certain clearances, consent to operate, things like that. Those also we have to do in parallel. So which we are already on the job today, not in a hurry at all. And as and when it happens, we will not be at least short in the market. That is for sure. We won't lose the opportunity that there is a demand there and we don't have cement. That won't happen.
All right. Given the optimistic picture that you're painting about the demand as a whole, what kind of price hike are we expecting for the quarter gone, for the coming month, or for that matter by the end of December, because this is the season for a price hike?
Normally you say about 10 to 20 rupees a bag should be going up in the coming 2-3 months.
All right, so the last question that I have for you will relate to your debt picture in that case. I'd like to understand your outstanding debt situation right now, because I was given the con call, the management guided that the company plans to repay around 150 crore of debt by the first half of the financial year. So I'd like to understand how much of the debt has been repaid and what is the situation going to be by the end of 2019, financial year 2019.
See, whatever was due for us to be paid in this financial has already been paid, which I mentioned earlier. Now going forward, our net debt today as of now, it looks like about 340 crores. 125 crores will be paid in the next year and 125 crores will be paid thereafter. So by 2021, end of 21, we want financial 21, we should be zero debt virtually.